presentation from Kyle Windsor. He's an MBA owner at Windsor Consulting, LLC. He's an experienced controller and CFO with an extensive record of accomplishments supporting financial growth of small to mid-sized businesses and startups. He offers expert knowledge, as I think we'll all see today, in all areas of accounting, financial operations, and human resources. So with no further ado, I'd have to say it's my pleasure to share with you something that we've discovered as an incredible benefit that's out there that frankly, most people are not aware of. So with no further ado, over to you, Kyle.
Hey, thanks so much. I'm super excited to be here. Myself and Kim Galloway, who will introduce herself in a moment. I need to introduce myself because I have a long history with Cupertino, almost 6 decades. In fact, I lived in a house, my mom still lives there, which was in San Jose in 1975. We were annexed to Cupertino. I'll never forget that day. And a lot of things changed on that day. So I graduated from Cupertino High School, went to De Anza College, et cetera, et cetera, et cetera. So Cupertino is actually where I'm from, and still actually live here in the area. So Kim, Windsor Consulting, we do a lot of anything accounting and HR related, we do. And that includes taxes. Been doing this for a long time, many decades. Kim, why don't you introduce yourself?
Thanks, Kyle. Hi, everybody. I'm Kim Galloway. I'm a CPA consultant for Windsor Consulting. Been in the Bay Area for quite a while, I guess since 1992, and actually attended local colleges here, got my degree in CPA and worked for Ernst & Young, and now I am happy to be doing this and helping small businesses grow and succeed, and making sure people are aware of all the things that are out there that can benefit them.
Yeah, she is an amazing CPA. She knows her stuff, super detailed and very customer oriented. Well, let me tell you what we're going to do, and then we'll jump in. So we're going to do 3 things. We're going to be talking about the ERTC, the Employee Retention Tax Credit. I'm going to give you, Kim and I will give you the history. We're going to do a high level what it is, and then we're going to go into some details. So history, high level, some details. What I'm going to do is I'm going to share my screen, and I'm going to start. So that's us. There you go. Why it matters. So the ERTC is the Employee Retention Tax Credit, of which the introductions, by the way, were very helpful on this recording here. It sounds to me like every single person on this call is eligible. People that live in Cupertino or in the area. Your business could qualify for and receive tens or hundreds of thousands of dollars. We're working with one client right now that they will receive back probably, we haven't finished, over $4 million they will receive back from the IRS. Most businesses, in fact, I don't know any business that has actually gone out and done this because of a variety of reasons that we'll get into. Most of it is just wrong knowledge. So what we're about to go through, again, I'm going to give you the history, kind of the high level of what it is, and then we'll get into some details of it. Short history. This ERTC was initiated as part of the CARES Act. Anybody raise your hand if you remember March 2020 when the whole virus thing happened, right? So that was seems like a lifetime ago. But Congress actually, at that moment in time, worked together, both parties, and they put together the CARES Act. At that time, the a business was not eligible for the ERTC if they were going after the PPP, and we'll call it PPP number 1, PPP number 2 had not been around, obviously, at that point in time. So it was an either or. You either got the PPP or the ERTC. Most of you received the PPP. So that was March 27th, 2020. Businesses at that moment in time could receive $5,000 per employee for those with eligible wages who earned $10,000 from March 13th to December 31st, depending on the quarters and the business if the business was affected. So basically, you could receive back from the employee retention credit $5,000 per employee. Something happened at the end of 2020 that's super important. That the Taxpayer Certainty and Disaster Tax Relief Act of 2020, which was part of the Consolidated Appropriations Act, and they called it 2021, even though it was signed in 2020, was signed into law by the president on December 27th, 2020, which significantly modified and expanded the provisions of the ERTC. Here's the key. And on December 27, 2020, Congress now says you can get both the PPP and the ERTC. You can get both. Let me pause here for effect. Kim, any thoughts on that?
No, I will say in the beginning when all this started coming out, everybody jumped right on PPP loans. They were great. We heard they were going to be forgiven if you met the requirements. So everybody kind of said ERTC, whatever. We just ignored it, went straight for PPP loans. And then at the end of 2020, they switched it all up on us, which Congress likes to do, and made it, possible so that you could have both. And it became a rush of getting knowledge and getting it all, start working on it.
Right. What was crazy about it is the PPP, I don't know how it took off so fast, but the marketing of the PPP, the Payroll Protection Program, was amazing. It just caught wildfire. In fact, Congress ran out of money and they had to appropriate more money and so on. But the ERTC was kind of that lost child. Yes.
Kyle, I'll just jump in now here and just say our company was totally in that camp. We thought that since we applied for and received the PPP, that, if any of us even knew about the ERTC, we didn't think we qualified because we did PPP. And I'll also just, throw in there that Kyle and his team just recently helped my company recover over $800,000 in ERTC funds. And then he's also working with the chamber, which has far fewer employees, of course, but we're getting about $56,000 back from the chamber. So it's just amazing that so many people don't know about this or take advantage of it.
Right, it's real money, which is amazing. All right, well, let's keep going. What is the ERTC? So what the ERTC is, in 2020, we have to divide it into two. We have to talk about 2020 and 2021 because they are similar, but they have different rules to them. So 2020, the tax credit is equal to 50% of qualified wages paid between the March 13th and December 31st, with a maximum credit of $5,000 per employee. So maybe you had an employee that was only there for a month during that time. Great, we can, they qualify up to $10,000 and only half of that. So, but maybe they were only paid $4,000 during that time. Well, then you get $2,000 as part of that. 2021, the rules changed. Instead of the entire year, now it's by quarter. The ERTC rate per employee increased to 70%. That's $7,000 per employee per quarter. So let me give you an example. Let's say you had 50 employees. Kim, help me do the math here. So in 2020, somebody had 50 employees and they got the PPP and it was forgiven, but we're going to use a different time period in 2020. And they had 50 employees and they all got in 2020 $5,000. How much is that?
$250,000.
Now, what if they had 50 employees as well during the first quarter of 2021? Now we're at what?
350,000 just for Q1, assuming that
Just
they had the full wages, right? Yes.
right. I mean, there's a lot of, again, high level,
Yeah.
there are variables in here.
Mhm.
That's a lot of money on the table for your company. Now, whether you have 2 employees, 10 employees, 300 employees, you know, and so on.
That was
Now,
only for
Kim,
one quarter of 2021.
Correct.
So it's 350,000 times 3.
That's correct.
Okay.
We're talking a lot of money on the table for your company. Now, Kim, why don't you, just recently, Congress decided to spend another like 1.5 trillion or something like that. And in there, they made an ERTC update. Why don't you give us that?
Right. So in the recently signed infrastructure bill, they did make some modifications to the ERTC credit, that being that initially it was planned to be for all 4 quarters of 2021. They have since decided it's only for Q1 through Q3. You can still get it for Q4 if you are what's called a recovery startup business. And in order to be that, there's several conditions. You have to have been started carrying on a trader business after February 15th of 2020 with annual average gross receipts less than $1 million. And then you could still qualify. So for most companies that have been in existence for a while, it's just limited to Q1 through Q3. However, Q4 still could be in play if you meet the definition of a recovery startup business.
Right. Here's an important part of this is Congress keeps tampering with the ERTC just like they tamper with a lot of other things. Kim and I stay on top of what the government is doing so that we are, and you can be compliant on the ERTC, okay? Does your company qualify in 2020? So there are 2 reasons you could qualify. This is an either or. You don't have to meet each of these. There's 2. So the first is, did your gross receipts decline by at least 50% in any one quarter compared to the same quarter in 2019? So again, Congress got this right, the ERTC and the PPP, because they want small businesses to stay in business because they know that's the bread and butter of America. So in here, what they're doing is they're going saying, okay, in 2019, how did you do? And did you, in 2020, did you decline in any quarter by 50%? That's one area. Kim, why don't you do the second reason? I'll put that on the screen here.
Sure. Yeah. If you the other reason you could qualify is if your business operations were at least partially suspended or shut down due to a federal, state, or local government order limiting commerce, travel, group meetings because of the pandemic, which is most all of the Bay Area, certainly Santa Clara County for sure.
Yep, exactly. And so I put a note here if you reside, if your business is in Santa Clara County, we were the most restrictive and punitive county in the United States during the height of the pandemic, including March 13th through March 31st. Absolutely, you qualify because of what the county. Now, maybe you were, what do they call it? Essential business or something like that. Even essential businesses, most of them qualify because the business was affected as a result of these orders. Now, Rick, do we have any questions at this point, or should we keep going here?
Why don't you go ahead and keep going? I don't see any questions.
No, I
yet.
have a question, Luciano here.
Okay.
So when you said operations were at least partially suspended, can you be a little bit more pinpointing for some of the businesses that are represented here? For example, I have 2 restaurants. What's the meaning of partially suspended? That we couldn't operate inside, we couldn't operate outside, or something else?
Right. So that's a great question. Let me speak to it at a high level. So the answer will be for all of our businesses. When you were doing business on, let's say, February 28th, 2020, and now it's say March 16th, 2020. Well, if you remember March 16th in Santa Clara County, everything was shut down. Were you partially suspended, or did your business, was it limited compared to February? And the answer is absolutely. If you're in Santa Clara County, you're a restaurant, oh, absolutely. Now, again, one thing that we do, that Kim and I do, is we will work, or whoever you get to do this, the ERTC, will work with you to document how your business was affected. We'll list the government mandates, and then as we document it, you just keep that document for posterity. You don't have to give it to anybody. But in case the IRS ever comes back and says, why do you qualify? You'll have that sheet with you. So does your company qualify? Now, one of the things not in the presentation is you have to have employees, and they have to be in the United States. So if you're a sole proprietor, you don't pay yourself, or you have, say, a business, but they're all 1099 folks. This is for businesses with employees because it's an employer retention tax credit. It's a tax credit, which is actually cash, but we'll get to that in a moment.
Kyle, one thing, can I jump in and add one thing to that?
Yes.
Yes. The other caveat would be that if you are a greater than 50% owner in the company and you pay yourself wages, we do not get to include the owner's wages or any direct lineal descendants that work for the company that are related to the owner. Just put that out there.
There are a couple more questions,
Yeah.
Kyle. I think if you don't mind, I think you already answered the sole proprietor one. It said, what about if sole proprietor and don't pay W-2 paycheck? How do we do that? I think you just answered that one. The other question that's in the chat says that ERTC monies are exclusive from the PPP money that we might have received. Correct. That is correct, right?
Yeah, the PPP and ERTC are apples and oranges, completely different buckets of money.
And the third question is, if employees were forced to work from home, does that mean business was partially suspended?
Yes, absolutely. Yep. If you could not conduct business as you normally do, you were affected by the county or federal ordinance. Absolutely.
We just got one other question in. Can we go more into about 50% owner can't qualify section of it, or is that coming up in your presentation?
Kim, do you want to talk to that?
Yes, like for example, if you have a corporation or S corporation and you are the owner, 100% owner of that corporation, you have employees that you pay, but you also pay yourself. a reasonable compensation salary. In calculating the amount of qualified wages, it would not include the owner's wages paid to themselves. They can still, anything paid to employees that are not related to the owner would count for qualified wages, but the owner's wages would not count.
Okay. And another
Right.
question is, if there is a 50% gross receipts decline in one quarter, are wages for the entire year eligible for the credit?
Do you
Kim,
mind,
you wanna
Kyle? I'll
answer
take that one.
Sure.
Yes, sure. So it's, if you have a greater than 50% decline in one quarter, you get the ERTC credit for that quarter and you're automatically qualified for the following quarter. And you continue to be qualified until your gross receipts, till the quarter after the quarter in which your gross receipts are no longer at that lower level.
You want a technical answer? There you go. That was it. Now, I've been talking in relationship to Santa Clara County. You all have friends and other businesses like a Terry. So Terry's in Las Vegas, and Terry knows people all throughout the United States. It is amazing to me how businesses throughout the United States have not availed themselves of this. So if you know businesses that need to like tap into this, pass the word on. It's not just obviously Santa Clara County. So let me divert for a second and talk about something, because most of you actually do qualify for this at a high level as I was listening to the introductions. Why don't businesses pursue the ERTC? Well, first of all, the number one reason why is that there's confusion over the PPP. In other words, well, I got the PPP, number one, I got the number two PPP, and I got number one forgiven. We're in the process of, getting forgiveness for number two. Well, the fact is that yes, you can receive both. Remember, March 2020, it was either or. December 2020, now it's a both and. You can receive the PP1, 2, and the ERTC. Here's the next one. Unbelief. I was telling Rick earlier, I remember talking to one of our clients that they're getting back $360,000, which they fell out of their chair when they heard that. And he asked, is this legal? Yes, this is the one time in my lifetime that Congress got it right, because they really are trying to help small businesses. So the next one, why don't businesses pursue the ERTC? It's too much work. I don't have time. I'm busy. And I would say, again, whether Windsor Consulting or somebody else does it, have somebody do it for you. Do not try this on your own. There's too many variables. And again, Congress keeps changing. You need somebody to do this who basically knows what they're doing. Last one is this. We're not pursuing it because I think there's just strings attached or it costs too much. Well, if you can get a net back of $200,000, which is actually on the low end of mostly what we do, what we're finding, yeah, it costs you nothing. Like literally it costs you nothing, and they are going to give you cash back. Kim, anything you want to say about this?
No, you got it right. That's exactly it. Mostly it's people saying, no, wait a minute, this can't be right. Or they had the old information from before when you could not have both PPP and ERTC.
Right. Yep.
Kyle, there are a couple of new questions that have popped up.
Sure.
Yeah, so the amounts for owners and child of owner, so no amounts for owners and child of owner, correct? And I don't know if I'm getting that question right, but
yeah, so maybe they have
I think they're
a son or
asking, so
daughter.
they just want to clarify. Yeah, if you're an owner, 100% owner in a business or greater than 50% owner, and you pay yourself wages and you have a son or a daughter that works for the business as well, their wages and your wages would not be included in this.
Okay. And then from Doris, to be completely clear, no 1099 wages are included in this?
Correct, because this is a employer tax credit.
Okay.
Yes.
And then from Crystal, assuming the gross receipts are the same pre-COVID, can a business still be eligible for July, September 2021 quarter as the shelter-in-place order ended on the 15th of June in 21?
So there's two questions in that one question. The first question is, what if our company in revenue grew? Are we eligible? Well, if the business was partially suspended or affected by a county, state, federal ordinance, the answer is yes. And the second question is, I forget what it was.
It was if the shelter-in-place order was lifted June 15th of 21, can a business still be eligible July, August, and September of 21?
Yes, the answer is yes, absolutely.
Obviously,
Okay.
everything is dependent upon individual scenarios, and that's where we deep dive and look into those details to make sure everything is being done right.
Yep.
There's one more question before you go on that came directly to me. It says, trust beneficiaries work for a trust DBA company that received PPP. Does their income qualify for the ERTC?
Sorry, could you repeat that one more time?
Sure. Trust beneficiaries work for a trust DBA company that received the PPP. Does their income qualify for ERTC?
Likely not, but it depends on a lot of different scenarios. So we would have to we'd have to get more specific on the relationships between the trust, the beneficiaries, the trust grantors, things like that, to make sure we're doing it right.
Yeah, absolutely, for sure. There's individual.
It's worth looking into at least.
Yeah, love it. All right, does your company qualify for 2021? Again, it's the same thing, but they changed the rules. They made it easier for you to receive the money. And this is actually December 31st, should be September 30th, Q4. It has different rules now. So does your gross receipts decline by at least 20% in any one quarter 2021 compared to 2019? Or, this is an or, it's not a both and, it's an or, where your operation is at least partially suspended or affected by the virus. So remember, I know this was a long time ago, but in January of this year was when the COVID cases were at the peak. You guys remember that? And that's when most shutdowns were occurring, et cetera, et cetera. And so most people in the United States actually qualify, most businesses qualify for Q1 and of 2021. And that's when it's $7,000 per employee per quarter, okay? Let's talk about the PPP and the ERTC. If forgiveness for PPP number one was received, one cannot use the wages calculated for the forgiveness for the ERTC. Basically, what Congress is saying is, we just don't want you to double dip. And this is where people are confused is, well, I got the forgiveness, I got the money, so I can't get the ERTC. Yes, you can. What we do, what Kim and I and our team does, is we get your PPP information because you had to submit the actual payroll data for forgiveness. And we'll take those dates and the people and we'll eliminate them from the ERTC calculation. Bottom line, top level, is in virtually every scenario, the businesses that we work with have gotten more money back than we first thought. And the PPP forgiveness very rarely ever interrupts what they actually are eligible for the ERTC. Yes, a company can't double dip, but you can get both the ERTC and the PPP. So here's some action items. You might start thinking through whether your business qualifies. How was my business in 2020 affected in your particular scenario? Like somebody had asked the question, well, we started working remotely, and as a result of that, what occurred? I couldn't go see my customers in the office, et cetera, et cetera. So just start thinking that through. You might want to just start writing that down. Work with your payroll provider, CPA, or us for the data for 2020. You also want to do this for 2021. Now I'm going to pause here. I'm going to throw a little curveball, which now your business files taxes, right? Hopefully. So I'm going to ask a question. I need you to ask your CPA or tax preparer this question. Why didn't you tell me about the ERTC? Like, seriously, why didn't you tell me about this? How come you're supposed to provide customer service, and why am I talking to you about it? You should be talking to me. Kim, anything you want to say on that? You're a CPA.
Just to say that I'm quite familiar with a large number of other CPAs that aren't really addressing this proactively with their clients, and it's just because they're very busy and they're like, well, we don't have time to open that can of worms. But if a client comes to them and asks about it, they'll generally maybe help them with it or say, well, we don't do that. You have to find somebody else to do that, because it is complicated and people just short on time. So I know quite a lot that aren't being proactive about it.
Kim's being very, very nice. And look, if your CPA did not tell you about this and they left a couple $100,000 on the table that you're not getting because they refuse to tell you, you should be finding a new CPA. Can I just say it bluntly like that? I mean, you need somebody that has your back and watches your business on this type of stuff. So you should take a screenshot of this and you go ask your CPA or your tax preparer that question. All right. Oh, or you can email us to find a new CPA or a new tax preparer. All right, here's the rest of the action items. After everything's calculated and so on, so we happen to do 1 year at a time. Say we start with 2020. New 941Xs have to be filed. They actually have to be mailed to the IRS. They do not accept them electronically. And then depending on how you take the money. So there's two ways to take the money. You can take it as a credit and apply it to future payrolls, or you can ask them to send you a check. Either one is valid, and you can do a combination of them if you want. If you do the 2020, let's say you get $50,000 back or $100,000 back, your taxes will have to be refiled. Now, you need to discuss that with the tax preparer as a result, and then ask them how much it will cost. Now, look, if your tax preparer is going to redo it and they didn't tell you about the ERTC, my advice to you is say, you're going to file this for me and you're going to do it for free, because otherwise they could have done it prior to filing your 2020 taxes. So it's really on them. Be sure to do the 2021 ERTC prior to filing your taxes for 2021. So just a note about us. Look, I don't really care if you use Windsor Consulting or not. I want you to get the money that the government is saying, hey, Here's the money back. We want you to grow. So that's what we do, is we just help businesses grow. This is just one piece of it. I will tell you, if you go to ADP or any of the other payroll providers, they will, if they do it, they will charge you 10% of the calculated ERTC. I think it's a shame. I think they should do this as a service. We would never charge, and think about charging that much money. If you want to check with us, here's our contact info. And Kim, anything else you want to say, or anything I missed about the ERTC?
I don't believe so. There might be some more questions from
Did
people.
we get the,
Sure.
there was a question about the PPP number one, I don't think we asked that question. The question is, if we received PPP number one and the shelter in place Santa Clara County March 12/31/20 dates, we can't use any wages to ERTC?
I believe the question is, and I'm going to do a scenario. So this company, let's say they applied for PPP number one and received it, say in April 1st, 2020. So they applied for the PPP number one, they got the money, $100,000 in April 1st. When that company, then they went back and applied for forgiveness. So applying for forgiveness, you start on the day that you receive the funds, and we'll just use April 1st. And it's typically either 8 weeks or 24 weeks. Most use it up in 8 weeks. But whatever that time period is, to reach the full forgiveness amount, those wages with those very specific people will not be used to calculate the ERTC. But remember, on the PPP number one, you couldn't use folks who made over 100,000. So you could use up to 100,000 of wages. You couldn't use over that. Well, we can use that other part of their salary for the ERTC. So the answer is yes, you can use 2020. You just can't use the specific people and the dates that you use for the PPP. And that is true for 2021. Most people haven't yet had it forgiven. They're just applying now. In October, November, that all started, the applications for forgiveness. So we would need, and you will need to know, what dates are you actually using for forgiveness?
Great, thank you. Other questions? About all the things that we can and should be doing. Crystal?
Hi, this is Crystal. So I asked a question earlier in the chat and asking if the business is still eligible when the government order, which is a shelter in place, ended in June 15th. So the answer from the presenter say yes. So but earlier in your slide, you're showing that the two criteria is either or. Either you have a reduction in your gross receipt, or there is a government order. So, but the government order is already ended in June 15th. So on what ground can we still eligible for it?
That is a great question. Never been asked that, but there's a real simple answer. Our governor still has California in a state of emergency. That has not been lifted. Sarah Cody, who's our health something or other, I forget her title, still has a state of emergency in Santa Clara County. So there are still orders in place today that affect your business. So what we'll do is we'll take a deep dive into your particular scenario and kind of walk it through with you, because we don't know your business, your rhythms. You know what those are. But in Santa Clara County,
absolutely.
100%. It's,
Yeah.
yeah, we are still under a state of emergency.
Bill had a question.
and I was-
Go ahead,
Sorry.
Kim.
I was just going to say exactly what Kyle said. We would look more detailed at your individual situation. We can't say blanketly that every single business in every single situation would qualify. But, you know, if you were a restaurant, maybe you were allowed to be open, but you could only have 50% capacity indoors. So you're very limited. You're not able to help determine if you would qualify.
Right. Yep.
Bill, go ahead and ask your question.
Oh, it's been repeated by Luis as well. It's the business operations test applied quarter by quarter. He said in 2021, and mine is it's dates. Is that by quarters?
Are you referring to the reduction in gross receipts calculation?
I believe so. I'm trying to refer back to what you said.
Yes, that you are applying it quarterly.
So
Yes, so you're looking at your gross receipts in, Q1 of 2021 compared to Q1 of 2019. And if you have that greater than, decline in your gross receipts, then you would qualify for that quarter. And then you do it.
Okay, then maybe mine was a little more on the salary expenses, the wage expense. Is that by quarter? Or is it the same thing?
Oh, so I think you're asking when we calculate the ERTC in 2020, it's for the entire year. We do calculate it quarter by quarter, but you can only do 5,000 per employee for the entire year. For 2021, it's by quarter. So you can do 7,000 per employee for Q1 of this year, Q2 of this year, and Q3 of this year, depending on if your business is qualified.
Thank you.
Question, just to pursue that, the sense of my question was, if you qualify for business operations suspension or gross receipts in a particular quarter, does that mean then the wages for that quarter are eligible and that you must do it you have to meet the test each quarter and then those wages are eligible for that quarter, or is it something else?
Yeah, it is exactly like that. If you meet those conditions for that particular quarter, then you're looking at the wages within that quarter, as long as they're not already counted for PPP forgiveness. Yeah.
I have a question. Couple questions, actually. My wife and I own the company 50/50 S Corp. So you're saying 51 or more. So would we qualify for ourselves on there? That's our first question.
Sorry about that. I forgot I was muted there. I believe I see what you're saying, because it's greater than 50% owners don't qualify, but if you're husband and wife and it's 50/50, that's a good question, Kyle. I haven't had that situation quite yet.
Shoot us an email, we'll get you an answer.
Yeah.
The other part is too, I mean, we're closed down probably 80% of the time. So, I mean, we couldn't pay our employees. Most of them were on unemployment waiting to come back. So, I mean, that's
right. Did you happen to get one of the PPPs and use that money to pay employees?
Yeah,
chance?
We did both of them. Yeah.
Yeah. So here's what I've found is most businesses, again, high level, there's very specific rules that we'll navigate through. But most businesses that receive the PPP also actually qualify for the ERTC. They're apples and oranges, but that's what I've seen has been the trend.
Right. But if he didn't have any wages paid to employees,
then you don't, then right.
Then
you have
yeah,
to have employees, right?
Yeah, it's really, and the point behind that really is that the government they wanted to encourage employers to find a way to continue paying their employees and keeping them on payroll. So this was, the benefit of doing that if you were able to.
Yeah,
which a lot weren't.
I'm going to interrupt a little bit. Kyle and Kim, can you put your contact information in the chat so people can grab that?
Oh, sure.
the questions keep coming in, and I don't expect them to all be gone by 12 noon, which we are committed to honoring everyone's time. So I expect there will be a lot of follow-up. And then we had some other questions, I think that were there. And why I think I lost it, but anyway, sorry, go ahead. I think Louis, you had another question, I think.
I was just asking if there's a deadline.
You know, that is a great question. You are a smart man. Very few people ask that question. So here's the answer. There is a deadline, and it's going to be, I think it's what, 3 years after the 940, after you file the taxes, you can't go back or something like that, Kim. But here's my expectation of Congress. My expectation of Congress is at some point they're going to come back and say, oh, well, we changed our minds. We're going to give you until, you know, I'm going to make up a date, January 31st, 2022 or whatever. I actually think they'll do that. I have nothing to base that opinion on, except it's Congress. And as we all know, they've just lost their minds and they're doing stuff that doesn't make sense, which is Congress in general. But right now there is not. Now, if you're doing 2021, you need to make sure you do the ERTC before you file your taxes. Otherwise, you're gonna have to refile them.
Kyle, somebody asked if they can just do 2021 and not take advantage of 2020.
Yeah, of course. You can leave money on the table. Absolutely.
Did
I'm
we
kidding.
answer Beth's
Yes.
question? Beth had a question about siblings. Just to read it off, it says, if you're family owned and run businesses, siblings, in-laws, etc., would it depend on their corporate structure as to whether they would qualify for the ERTC? They are a restaurant. It's a restaurant business.
Well, yes and no. I mean, the corporate structure, it would depend on the relationship between those employees and the owners. So if it's a sole proprietor, then that's a single, 100% owned business. So then we would look at the lineal descendants of that owner. I don't know if that answers the question, but yeah, we do have to kind of look at the business structure and the ownership.
Yeah, it wasn't that long ago that Congress came out, or the IRS came out with clarification. Kim actually found this on ownership, and when she read me the rule, you would think that this is like the biggest joke in history of the owner. They can't have a spouse, and they can't have brothers and sisters living, and if they're alone in the world, they call. I mean, it's. Don't worry, we got you covered. We understand what Congress is saying and what the rules are.
Great. And there's another question, and perhaps we can do this as a close because it's a perfect question. Thank you, Bill. Well, I'll see if I can squeeze another one in from Cipriano to clarify. If I receive the 2020 PPP 1 and 2, I can still apply for the 2021 ERTC.
Yes, and you can apply for 2020 as well.
Great. Yeah, that's right. What you started with, right? I think we all have that fundamental disbelief that this is really just sitting there. Is there a website where people can see the formula for computing the ERTC 2020 or the ERTC 2021?
Sure, that's a great question. Not that I'm aware of, but again, there's a lot of rules that the IRS keeps coming out with. I would not attempt this on your own under any circumstance. Take the presentation, do a rough calculation, and then either get with us or get with your tax preparer or somebody you know, to have them like hammer this down and get it done.
Hey,
Rick,
Kyle.
and Anjali, this has been amazing. The Cupertino Chamber of Commerce, awesome. I hope that this presentation will be shared throughout the US. Again, whether we do it or not, let's get businesses the money that the IRS.
Do you have, can you be sure to share the slide deck with us? Can we share that with
Sure.
people? Great. Keith, you were going to say something?
Well, that's what I was going to suggest. If Rick can email out his slides to everybody here, because it does have, I mean, it's kind of dumbed down, thankfully, for me and for us. The formula is kind of in the slides, so it'll be a good refresher.
Yeah, we can certainly do that. If you signed up, we have your email and we'll send it out. The recording, we do a little editing and that will go up probably end of the day or tomorrow. But we can be happy to send a link to everyone for that as well. And are there other questions?
We're right on.
By the way, this is for nonprofits, churches, businesses, C Corps, LLCs, and so on. So this applies to everybody.
Well, super. Thank you, everybody, for the time. We actually, I don't know, can we talk about Kyle's work? We found out about this from Keith at Pacific Workplaces. Thank you, Keith.
Yep.
And Anjali, do you want to talk about what the Chamber's experience was?
Yes, as Keith had mentioned at the start of the seminar, we were so lucky that Keith introduced us to Kyle, and then in turn we brought this webinar for all of you, because as we learned from him that the Chamber being so small, we had 3 employees, nonprofit, we didn't think we would qualify or find any money, and he found us, over $50,000, which for a chamber our size makes a huge difference, which really impacts all of you, because then we can bring you more services and more resources. The more resources we have, the better we can serve our members. And so we are so grateful for that, and we are so happy that you all joined us, and we'll do our best to spread this word. We want more of our small businesses to know about it, whether you use Kyle and his team or anyone else to find you this dollars that the federal government has out there, but we just don't know about it. Thank you so much for being here. And thank you, Kyle. And
Hey,
Kim.
thank you. Guys are awesome.
Thank you all.
Yeah, and there's a closing question, I think, is where do people start? And I think the start would be just to reach out to Kim or Kyle, would be perhaps.
And have a cup of coffee before you do that.
Yeah, great. Well, thank you so much, everyone.
Thank you.
Have a great day. Thank you, Kyle. Thank you, Kim.
Thank
And
you.
we'll see you next time.
Bye, everybody.
Bye.
Excellent work.